So first of all, I would like to let people know that investment banking will soon be a history. 1 year before, I shooted a video in Singapore when I was in Singapore at that point of time. In fact, I stay in Singapore more, but now due to Chinese virus, you understand. I shooted a video about CFA, and I always call CFA as a certified financial analyst, never chartered financial analyst. And CFA people himself know that I call this as a certified financial analyst. And on an informal note, we chat with them, and what happens is that they acknowledge that it is that even a single chapter change take years. But they always come on our WhatsApp groups and they said that because of our job and the salary, we cannot support you openly, but we know what you are saying. Second is the technology. Technology is changing very fast. There is no doubt about that. And we always speak with the evidence. Because technology led to the job cuts, and job cuts is bound to happen. We all know about that. For that, I am having the fact with me. Royal Bank of Scotland Group new boss Alison Rose is abandoning the bank 3-century-old name and slashing its market business, and state-controlled lender stepped away from its tumultuous past. Royal Bank of Scotland will now be NatWest Group later this year, adopting the brand of its English branch network it's used since a merger that reshaped British banking two decades ago. Okay, that's a different thing. The firm, which is still recovering from one of the costliest bailout of the financial crisis 2008, will incur a cost as much as £1 billion, which is approximately 1.30 billion US dollars, as it cuts expenses on the face of challenging market condition. Royal Bank of Scotland softened its outlook, a key measure of profitability, which is return on tangible equity. I'm sure 90% of the people here do not know even the formula of return of tangible equity. And many people, those who are watching this video, in fact, do not know that banking profitability is not measured on PAT. PAT stands for bottom line, also stands for profit after tax. The bank's profitability is measured on a universally agreed notion, which is known as return on tangible equity. I'm damn sure 99% people put a hand on their heart like I put and say that I know the formula of return on tangible equity. I give you an open challenge. You download the annual report of any good bank and try and compute return on tangible equity, you get to know where you stand. Actually where you stand. Anyways. RBI softened its outlook for a key measure of profitability, targeting returns of 9% to 11% for the medium to long. It is also previously dropped to 12% on return on tangible equity. Right? Target for 2020. Anyways, the most important thing is that NatWest market risk weighted asset will almost half in size to about 20 billion. The unit accounts for around 4,500 of the total 65,000 staff, and according to an estimate that around 3,000 plus jobs will go only in the current restructuring, and majority of the jobs will come from Poland, and the cost would be 600 million pounds. So banking is changing. In this year, JP Morgan Consumer Finance is firing 3,000 plus people, if not 2,500 at least. Goldman Sachs is cutting the partners program. UBS, Credit Suisse, and Deutsche and JP Morgan. I'm not sure about Goldman, but I'm sure about UBS, Deutsche, JP Morgan, and Credit Suisse. They four decided to either freeze the bonuses of the traders or they make it very small. For Deutsche, I'm sure that they freezed it out this time. Around 65 to 75,000 jobs cut only in the investment banking segment in the last year, 2019. According to an informal estimate in the interbank market, around 250,000 jobs cut only last year in the banking sector, and around 80% of this job is from US and Europe. And out of this 2,60,000, around 75,000 to 85,000 jobs cut only in the investment banking segment, and rest in the different, which is consumer finance, front office and all. So investment banking is facing two different issues, in fact three, in fact four. Number one, the course curriculum which is being taught on the name of the investment banking, which is CFA, Certified Financial Analyst, this is wrong. Completely obsolete in nature. It do not cover anything. Example, Goldman and JP are testing SOFR swaptions. JP with National Bank of Canada is testing SOFR and CC and CORA with CCIRS, which is basis swap. God knows Saron will come into the picture. God knows Sonia come into the picture. British treasurers are shifting from LIBOR denominated GBP products to Sonia, which is trailing overnight index average. But nothing is a part of CFA as far as the valuation is concerned. For the sake of theory, they might have about one paragraph or two paragraph, but valuation is completely missing. More importantly, from a technological angle, that how investment banking is shifting, which is broker crossing network, which is known as BCN. No CFA course will teach you what is BCN, broker crossing network. And guys, if you know how to design a broker crossing network, you are king. And by the way, it is not a lecture. Treasury Consulting will enter into broker crossing network in 2021 August, not now, because we are busy now. No CFA course will teach you about broker crossing network. It will teach you about OMS, order management system, EMS, execution management system, FXall, trade web and all these things. No one will tell you about that. Third thing which is hitting the investment banking, apart from technology, apart from the course, which is basically the knowledge, is the fees. But we come to fees later. We have another thing which is hitting investment banking, which is robo. Let's have this. So you know that we have a WhatsApp group, and in this WhatsApp group we continue to share a lot of information with each other. So I'm reading an article which I pasted on WhatsApp. Robots have arrived on Wall Street and humans need to learn how to work with them. JP Morgan Chase is rolling out virtual assistants to maintain help desk, track errors and route inquiries. A Bank of America corporate client made a $1.6 billion payment on mobile phone. Alliance Bernstein Holding LP Robo, which is ABBY, can gather 4 million data points a day and execute bond trades directly with counterparty bots. Counterparty bots. Heard this? Which course is teaching this? US banks could access an estimated 2 lakh jobs, which covers the branch bank, call center, corporate employees, bearing the brunt of these cuts as the lender automate back office function. I'm not saying this, Bloomberg saying this. US banks could access an estimated 2 lakh jobs, which covers branch banking, call center, corporate employees, bearing the brunt of these cuts as the lender automate back offices, according to Wells Fargo and company. And by the way, Wells Fargo himself is firing people. Artificial intelligence, a branch of computer science which aims to imbibe machines and everything, it is including robo. Now let me read more. The first to go will be those with the roles that are repetitive in nature. Examples: support functions, back office processing, producing reports that rely on the structured data. More than 50% of the tasks performed by loan officers, financial advisors, bank supervisors, loan clerk and tellers could be automated or augmented by 2025. According to Accenture, in the capital market, more than half of the work done by financial analysts, sales agent, brokerage clerks, statisticians could automated or augmented. And this is according to McKinsey. This is last. Consider a junior investment banker who spent much of his or her time collecting and analyzing data and creating report. Even the highest paid jobs for portfolio managers could disappear as the firm used data scientists to solve for the most complex investment problems. According to the Macros Lopez, he's a professor and the former head of AQR Capital. Many as 6.1 million people employed in finance and insurance companies will lose the job because they are not trained. Many as 6.1 million, 60 lakhs people employed in the finance and the insurance industry will lose their job. I think if people are thinking I'm speaking wrong, okay. In a survey by CFA Institute members and candidates, 43% said they expect to change their roles significantly in the next 5 to 10 years. And so on and so forth. But where are we busy? Where are we busy? We are busy in learning something which is useless. We are busy learning something which is good for nothing. We are busy learning something which is just like this, where it is. MIBOR linked with LIBOR. Most of the people, those who watching this video, they do not know that there is something which is known as bots. And now there are multiple kind of bots. We have engagement bots, we have corporate bots, we have our company having a bot. There are multiple bots. I'm not only talking about bot, we have a bot. Our company owned a bot we titled this is Julia. And we are increasing the experience of Julia before we turn out to be the bank in London next year. But where are we busy? I am not saying that. The article saying that 6.1 million people, those who working in a different finance function, will lose their job or have a threat of losing their jobs. The immediate cut would be 260,000 people, Bloomberg saying, I am not saying. But having said that, and who is launching the virtual assistant? JP Morgan. Is JP Morgan short of money? No. They can buy anything if they want. Boss, it is the 6th largest bank of the globe. 6th largest bank of the globe, JP Morgan Chase. I might be incorrect if this 6th is 5th, 4th, because I have not checked the latest, but as far as my best of knowledge, it is 6th. I have taken indemnification if it is higher than 6th. It is nothing personal and it is not intentional to JP Morgan. I have a great respect for JP Morgan and Goldman both. So where are we busy? And now comes the commercial part. No bank in the world can survive if it don't earns the money. No bank in the world can survive if it don't earns the money. But money is not on the trees which you go pick and sleep. And here is another evidence, because Treasury Consulting never talk until we have the evidence. Like we talk about Royal Bank of Scotland, here is the evidence. We talk about Bloomberg, here is the evidence. Now we talk about income. A late year gush of giant global sales led by Alibaba, which is around 13 billion, precisely 12.9. Hong Kong listing and around 20, it's not 26, is closer to 30 by Aramco, failing to deliver an equivalent payday to equity bankers. Filing on Thursday revealed that 17 banks will split 32.3 million for Alibaba. Come on. Out of 12.9 billion. So out of 12.9 billion of the fund raised, Alibaba paid 32 million, which is even not half percent. They not even paid half percent. So $12.9 billion is raised and they paid only $32 million, and that too to 17 banks. It means a single bank will not return home with $2 million of payout. So every bank on an average will receive around less than $2 million, and this, by the way, covers everything. Valuation, road shows, meeting with the investors, television media, interviews, flight cost, hotel cost, employee salary, facility cost, everything needs to be covered in that amount. And the scene is much worse Earlier this week, people familiar with the matter told Reuters that banks working on the Saudi Aramco would split a fees of 0.35%, which is once again less than 0.5%, meaning that they will get around $90 million. 90, which is 90. $90 million. So what is the moral of the story? The moral of the story is that the income which is coming is very less. Let me read this again. People involved in the Alibaba latest transaction said that the Hong Kong listing was always going to pay less for an equivalent IPO because of the company high profile and 5 years of investor friendly in this. Alibaba also had no roadshow of investor meeting and this and so on and so forth. Now I would like to ask a simple question. Investment banking is getting a hit on the knowledge side. That is for sure. Investment banking is getting a hit on the technological side. I told you this. Investment banking getting the hit on the income side. I told you this. I will not name an investment bank, but I will make you a guess that it is well known in Europe for an appropriate hint. Their investment banking division is now 1/3 of what it was. So previously if they had 3 people working for them, now only 1 people working for them. I gave you enough hint. If I want, I can tell you name, it is in the public, but I want you to explain. So if you are looking forward your career in investment bank, remember that with an obsolete knowledge like CFA, Certified Financial Analyst, CA, Chartered Accountant, CPA, Certified Public Accountant, American Institute of CPA, and all such useless degrees, the ambition of becoming an investment banker is unsaid. It's cannot possible. Before we wind up the video, let me have a special paragraph for you, which I selected only for this purpose. It is still hard to automate empathy or trust, so as long as client want to phone a salesman. People have jobs. Transactions that are large, complex or take illiquid market are harder to automate. Citibank plans to hire 2,500 programmers this year. It is also teaching to traders to code while making sure that its coders know how to trade. Goldman Sachs trading division is also adding engineers. Learn to work with tech as it deployed across business. Focus on the relationship management, which probably cannot be done by the computer, and so on and so forth. If your eyes still not waken up, then good morning. It is 3 a.m. in the morning. My mobile number, email ID, WhatsApp, everything is on our fixed income platform. www.fixedincome.global. And I assure you, our bot Julia will have a lot of good things in 2020. Have a good time.